One of the most important tools we use to learn how your business is doing financially is called the break-even point. Your break-even point is the point at which your company's total costs and total revenue are equal. Here's why you want to know your break-even point. It shows whether you are operating your business at a profit or a loss, and by how much. It helps you figure out how much of your revenue is contributing directly to your profits. It allows you to forecast how many months it will take you to break even on a new daycare facility or second location. It gives you the confidence to leverage your profits and reinvest money into different facets of your business, such as staff raises, additional hires, or facility upgrades. You can learn the break-even point for specific daycare programs, such as your infant program or your preschool program. You can then use this information to offset the costs of your more expensive program, usually infant care, with higher enrollment in more lucrative programs for the older children. Before you can calculate the break-even point for your childcare business, you need to know your fixed costs and variable costs. Remember, we talked about those in the last lesson. As a reminder, your fixed costs are those that remain constant regardless of the number of children enrolled in your program. They include such things as your rent, insurance, and utilities. Your variable costs are those that depend on how many children you have enrolled in your program. They include things like arts and crafts supplies, food and classroom materials. Reducing either your fixed costs or your variable costs can help you lower your break-even point if you need to make your childcare business more profitable. Now, let's talk about how to calculate your break-even point in units. The unit sales price for your childcare business is the cost of enrollment for one child for a specific time frame, such as 1 day, 1 week, or 1 month. To calculate the break-even point in units, divide the fixed costs by the sales price per unit minus the variable costs per unit. Here's an example. Let's say you've determined that your fixed costs for the month are $10,000. You've calculated your sale price per unit, or the cost of one child's daycare spot for a full month, to be $1,300. You've also calculated your variable costs per unit, or the variable costs associated with one child's daycare spot for a day, to be $27.75. Because we're using monthly costs for all other variables, we would need to convert this to monthly costs. This can be done by multiplying $27.75 by 5 to give the amount per week, and then multiplying by 52 to give an annual cost of $7,215. If we divide this by 12, we get a monthly cost of $601.25. To determine the break-even point in units, you can plug these figures into the formula. $10,000 divided by $1,300 minus $601.25 is equal to 14. So to break even, you must enroll 14 full-time equivalent children in your program. Your break-even point calculation will help you figure out how to maximize your revenue and lower your break-even point. If you need to lower your break-even point, you could either enroll more children in your program or reduce your fixed or variable costs. Calculating how your fixed costs, variable costs, and break-even point impact your profits will help you build a strong financial foundation for your childcare business.